Good morning, David. I'm so happy you can join me on Currency Countdown today, especially with everything that's happened in the news.
Well, thank you, Tracy. It's great to be with you. And boy, we certainly are getting the float news.
Well, I'm not really sure where to start, but let's start with currency since we're Currency Countdown. We've seen some very unusual activity here in the last couple of weeks. For instance, the Australian dollar was at a 30-year all-time high. Can you talk to me about currency?
Certainly. I think it's actually a 29-year high. We talked about this yesterday before the interview. But for all practical purposes, the Australian dollar is hitting a 29-year high. New Zealand hitting a 30-year high. The Canadian dollar, which tries to kind of peg to the U.S. dollar, is at a 3.5-year high. The Singapore dollar is at a record high. The yen is as high as it's been since March. And again, what we're seeing is that vis-a-vis the U.S. dollar, all these other currencies are moving higher, some to record highs within 3 decades. And what that suggests is that the confidence in the U.S. dollar is starting to wane in a substantial way. Because when you have a new high in foreign currency, what that's really stating, if you listen, is that the overall nation state is losing faith. Now, the governments themselves may not want those currencies to go higher against the dollar, but they don't have as much control as a lot of people think. Certainly, they intervene. Certainly, they try to control, and certainly they would love to play these markets to their advantage, which means lower, not higher. But the market has forces of its own, and because of that fact, you're seeing these kind of moves.
Okay, well, speaking of the banks, do you think Thursday's sell-off was actually led by the banks? Do you think this was the start of a new down leg or just another summer overreaction and lighter than normal summer trading conditions? What do you think, David?
A bit of both, but primarily it's a change of direction. You're starting to see the stock markets fall, particularly what happened in the U.S. markets, and this is, again, a lack of confidence. John Malden, who's pretty conservative, relatively speaking, I think he does a good job. I think he speaks the truth. I think he does a great job, but he's not a wild, flinging his arms type of person at all. Stated that, it wouldn't be a shock from his perspective to see a 40%, that's 40% drop in the over equity market. I agree with him. I think that the equities in the U.S., generally speaking, are overvalued. The unemployment situation continues. The manufacturing base has been basically gutted in the U.S. And quite frankly, there has to be an adjustment made to the new reality. So was it an overreaction in one day? Maybe slightly, but what it shows is the trend. To me, it's the start of a new trend, and that trend is down, and I think it's going to be significantly down, and hopefully it's going to be down in a manner that people can adjust to it, and not a waterfall decline or something that just scares everyone.
All right, well, let me throw you a curveball then. The last time this all occurred, a couple of my sources that play with billions of dollars all were fleeing the market. They were giving me the same kind of information, but this time, and intriguingly, I've had a couple of major buyers tell me they're going hard into the market and buying, which provides me with some actual encouragement. What do you think of that?
Well, I think that's, first of all, thanks for the input. Secondly, that's what makes a market. Let's face it. I mean, for every buyer, there's a seller in most cases. And because of that fact, when someone says, it's going down, someone else say, no, it's a good time to buy. Having said that, there has to be clearing. In other words, if there's a lot more selling than buying, then the price is going to go down substantially, and those new buyers are going to get it at a lower price. I disagree with that, but I don't manage billions. I will say that the overall complexion of the market, I think, has changed to the fact that what gold has shown us the last few days. Gold is the most negatively correlated asset to all asset classes, particularly the stock market. And I said, as many others have stated, that at some point in time, and I think we reached it yesterday, gold would march on majestically and shrug off all other news and continue to either maintain or go higher. And I believe that's what we're starting to see. So certainly these people that you mentioned could be moving in the market. That's certainly their choice. But what the market is showing me, and this is an early call, but I believe I'm correct, that the asset class of choice is, when in doubt, go to gold. There's no fever like gold fever, and when you don't know what the one currency is going to do to the next within a day's time. I mean, these swings in the currency markets that take place in one day used to not take place in 1 year, and that's how volatile things have become. So gold is that safe harbor, that monetary hitching post. It's that one thing that people in the know, and usually people with billions do know, that you can hitch your money to and be relatively assured that you're not going to lose any value or lose any wealth.
Very interesting. For instance, the Canadian dollar fell dramatically yesterday afternoon towards the U.S. dollar, and as Canadians were actually buying the American dollar. Also, I have here in my notes that I wanted to talk to you about gold. Gold and silver both fell yesterday. So obviously you expect to see them rise again in the near future, like today?
Well, I don't know about today. I think gold's off slightly as we're doing the interview. But the point is that gold particularly shrugged off this news. Yeah, it was off slightly, but I mean, we're talking about like less than 1%, I think, versus other markets that were off substantially more on a percentage basis. Silver, however, got hit pretty hard. Silver is smaller, more volatile, and easier to move around. And I think it's similar, and I want to say similar, not exactly like the 2008 crisis, and similar, meaning that silver is going to react more both directions than gold. I think silver will absolutely do as well as gold over the longer term, but wider swings and probably some downturn with the market. Silver tends to correlate more with the stock market than gold does. As again, I'll restate it, gold is the most negatively correlated asset to the stock market. So silver could go down and people get scared out of it or not want to buy it and that type of thinking, only to see it turn around and really shoot up like we saw during the 2008 crisis, where it went below 9 briefly. And from that point, it certainly went back and forth, but basically it climbed from 9 all the way up to toward 50. I think we're going to see another move in silver like that. You got to remember one thing, and Tracy, I know you know this, but I'm saying people in general should remember that a gold coin can be spent anywhere in the world, but so can a silver coin. And most people that buy silver as these markets decline more and more are not thinking about, the fundamentals of silver or how much industrial usage there is for silver, or if China is a net importer of silver, or all these things that I discuss in my reports and people ask me again and again and again. All they know is one thing: it's money and it works. It's as simple as that. So you don't have to overcomplicate it. If I'm poor and I'm in South America and I want to preserve something, I'm going to buy silver. I probably can't afford gold. And just use that analogy and multiply it by how many, billions of people are out there that have something to preserve or want to protect their wealth or want to spend something of value. And you've got an idea that I think was going to take hold more and more as the deterioration continues in the overall financial markets.
Okay, well, I'm buying silver when we get off the phone, and I can buy it online on your site?
Actually, no, we don't sell silver directly. I do have silver123.net that I'm affiliated with, and that is a monthly accumulation program. It's now available for Canadians, so if you're interested, go to silver123.net, but that's the only affiliation I really have. I do recommend coin dealers, both Canadian and U.S., actually some foreign as well, from time to time in the free update letter that comes out weekly. So indirectly, I do help people find dealers that I know and that I trust, but we don't actually sell directly ourselves.
Oh, that's an excellent point. I have one more question. It has to do with the U.S. employment figures. Would you like to comment on the numbers that came out this morning?
Well, to me, it's in the wash, and then these things always get adjusted. I mean, the basic trend, I think, is there. It's high unemployment, probably going higher. If you get an adjustment upward and you get, good employment numbers for a while, great. But I think that the problem is so much at the core of what's taken place over the last couple of decades of moving the manufacturing base of the United States overseas, no real new industrial base in the U.S., and people argue we're out of the industrial era, and I'd say certainly in a lot of ways we are, but nonetheless, you cannot run a strong economy on service industries. I mean, how many tanning salons and nail polish parlors do you need? And how many fast food restaurants? What you really need is ingenuity and productive capacity. And that's really not taking place a lot in the U.S. And I have to be clear, and I want to be objective. Certainly, the United States is still one of the leaders of ingenuity. I mean, some of the stuff that's going on in the software world, computers, and that type of thing, we're still leaders or near leaders in that field. But yet, the overall amount of employment that generates is far less than what it would be, say, in some other type of industry.
Well, David, thank you so much for joining me today. And I wish we had, I have to say, this is not one of the more positive interviews we've done, but thank you again, and thank you for providing us with so much input and good wisdom for how we should deal with the news that's currently coming out. I hope you have a wonderful weekend.
Thank you, Tracy. My pleasure.
Thank you.